Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, we're going to be looking at the week ahead analysis video. We're going to go through some of the news this week and some charts of interest. So diving into the news this week, we have lots of data out again this week. We have central bank rate decisions as well as some important employment data figures. So we kick it off with the week with some CPI data out of Switzerland. It's looking like the CPI is forecast to come down from 0.7% to 0.4%. So some potential good news there in Switzerland. The US, we have the ISM manufacturing PMI that looks to be coming in a little bit lower than previous, down from 47.7 to 47.5. We then most importantly have the RBA interest rate decision. The RBA expected to hike rates from 3.6% to 3.85%, again trying to fight the inflation rate close to 8% at the moment in Australia. So the RBA still willing to hike interest rates to combat that inflation rate. Pretty similar to the Bank of England really, where they were discussing the potential to hike rates further. We then have the RBNZ rate statement. New Zealand looking to increase interest rates from 4.75% to 5%, and that's largely expected as well. Now, we do have some bank holidays coming up towards the end of this week. On Friday, it's pretty much bank holidays globally. However, we do have the non-farm employment change out on Friday as well, which is, the biggest data set out of the US at the start of the month. And you can see that we've seen forecasts come from 311 previous down to 235. Average hourly earnings are expected to come in a little bit hotter than expected, and the unemployment rate is set to remain the same at 3.6%. But we'll probably get a little bit of a clue here. You can see unemployment claims are meant to go up to 200,000. That's largely sort of expected. That's what the Fed want to see essentially. They want to see the unemployment rate climb a little bit. They want to see the employment change move lower as well, because the labour market has essentially been too strong to fight the inflation rate aggressively. So they want to see that come in lower, and the average hourly earnings and the non-farm employment change does show a potential, a little bit sign of weakness there. So that's going to be interesting going into next week. On the strength meter, not too much in noticeable change. The only thing I would say is the yen came from those +5 areas, and we talked about the potential reversal forming in this area. It did reverse quite significantly, so the yen weakness is definitely something to take note of. Obviously, we have to really take that with a pinch of salt, because it was really a low sort of volatility week last week in terms of headline news as well as news in general. So that may kind of start to flick back a little bit going into this week's trading. So I'm going to kick it off with Euro US dollar. We were expecting Euro dollar to come and test the 1.1 handle. We didn't make it in the end. Instead, price actually rejected the sort of minor area of resistance, which we were looking at as well, around about the 1.0905 area. And we've kind of broken through a little bit of a trend line support in here. Looks like we're getting quite a strong reversal signal here for euro dollar. So we may see euro dollar trade back down towards the 1.07 handle, where these kind of highs and lows intersect going into this week. If the dollar, however, starts to weaken, we could expect price to come back up into that 1.1. That's where I'm expecting some sellers to be sitting in the market, because that's where we've seen them come in the past. So I would be surprised if we didn't see price hit this 1.1 at some point in the near future. However, this week we may see price trade down into this area, maybe into this support, and maybe rebound from that. Going on to Aussie US dollar then, so obviously we have the RBA rate decision this week. If the RBA are aggressive in tone and talk about trying to fight that rising inflation rate, then maybe we could see the Australian dollar strengthen slightly. I think the key area again is going to be this 0.67 area. We've been speaking about this for a couple of weeks. Price hasn't really been able to break above that. So I would like to see a strong move above it. If we did get a strong move above it, I'd be confident to say there's a potential for the Australian dollar to get stronger across the board, and we could see prices potentially trade higher here for the Aussie US dollar price. However, at the moment, we're capped below that 0.67 level and capped below the 200 daily moving average. So I'd like to see price potentially come back down to the next area of support of 0.6575. Going on to cable then, so cable's a really interesting market at the moment. Although the Bank of England are really suggesting that we're going to see interest rates continue to climb higher, the UK banking system is well funded and supported and resilient. We've come up into this weekly range high, and you can see how prices reacted from these areas recently. Prices come into them and reacted. Now we're back at the range highs here. I actually have an alert set at 1.2428, which is sort of in and around this area, around the 1.2425 as well. Just because I think price can maybe come into this area first. I'm looking for maybe a false breakout. Okay, if we see a false breakout there, then sellers might jump in the market, and sellers might try and trade price back down to the range lows. So there's a possibility there of a false breakout of a range situation going on. Now we do have a strong bearish candlestick on Friday. If that momentum was to continue, we could see prices maybe pushed down towards the 1.22 handle going into next week. But I am really interested in what will happen to price if it does make the highs here. Finally then, dollar yen. So dollar yen closed back down below the sort of 1.3275 handle, which is this sort of zone in here. Maybe this is a bit of a false breakout as well. And this is why I said we've got to be a little bit careful with yen, because we have seen a real move to weakness going through to sort of the end of last week. Well, last week in general, really, the yen weakened because the risk environment changed in the market. Now, if that risk sentiment switches again, then dollar yen could be heading back down towards the 130.75 handle. If, however, the risk off on sort of environment, the risk mood improves, continues to improve, then we could see price head towards the 134.50 handle going into next week. Hopefully that all made sense. If it did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.